Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. This show is designed to help us grow our money. You see, we spend a lot of our time going to work in order to make money so that we can eat. We take our time, we go to work, we get a paycheck so that we could provide. But imagine a world where money could make us money. We could work a little less if we wanted to and do the things that matter most. Spend time with family, friends, engage in a purpose that's greater than yourself. And so every week we bring different people on to teach you different investment strategies. Remember, you always want to cover the 4 questions to start when anyone offers you any type of investment opportunity. 1, what's the return on investment? 2, when do I get that return along with the money that I put in? 3, what is the minimum investment amount needed? And 4, what is the risk, the worst case scenario? Super excited about today's show. You'll have to wait. We'll be right back. Coming up, Sarah Larbi teaches us how to make money investing in cottages.
So I was looking for a cottage. I'm still looking for more of them because I do really enjoy them and I do like them. There are some criteria that I had as I was looking through. Definitely for me, it was important to get a 4-season cottage because the financing is easier and they can finance it like a secondary home.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rav. Welcome back to Everyday Investor. I'm talking to my good friend, Sarah Larbi. She's going to teach us how we can make money investing in cottages. Before we get to Sarah, let's go to our stocks expert, Omar Khan. Omar, what's happening this week?
Thanks, Rav. Omar Khan here, guys, with Data Trading. I just want to give you guys a quick update in the markets. Things are rosy right now, and that's when, you got to be a bit fearful. The S&P, the TSX, the NASDAQ are all at all-time highs. Now, generally speaking, when that happens and, people are very, very optimistic, that's generally a good warning sign the market's ready for a pullback, okay? And the second half of February is generally not the best time. So we're just entering that period now. So we really got to take a look at how are corporate earnings coming in the next little while. For example, companies' stocks go up over time because of corporate earnings. If they're making more money, it's simple as that. When a company's making more money, it's going to be worth more, right? It's simple as that. Now, all else being equal, of course. But if they're making more and more money, the stock should theoretically keep going up, all else being equal. Now, so that's what we're going to have to take a look at and see how quickly are we getting out of the pandemic? How quickly is the economy reopening up again? And, are these corporate earnings, are they equivalent to what the stock price is? Are they reflective of the stock price? So it's going to be very interesting a little while. The only thing is, I would say cautionary note, of course, when there's a famous saying by Warren Buffett, when others are greedy, be fearful, and when others are fearful, be greedy. Right now, everybody is greedy. So that is a good time to be fearful. And that's the way we're approaching it. But that's what the markets are right now, all-time highs. Anyways, back to you, Rob, and we'll see you guys here next week.
Thanks, Omar. Always great to hear from you. Sarah Larbi, how are you, my friend?
I'm doing awesome. How are you?
I'm doing good. How's the retired life?
It is pretty good. I mean, granted, we can't go and travel as freely as we would want, but it's been a goal of mine to retire early. And October 1st of 2020 was the retirement from the 9-to-5 world. So enjoying it so far. I'm enjoying taking my time back and doing things for myself.
Nice. I think that's really, I've been told that the word retirement and coincidence never really, was in the original language, whether it's Hebrew or Greek or Aramaic. People say coincidence. God's in control of all things, allows things to happen, makes them happen. When it comes to retirement, if you go back to my people in India, you say, hey, what happened to so-and-so? Oh, they retired. That means they passed away. And so what are your thoughts on that word retirement? When I say Sarah Larbi's retired, Yeah, it just kind of means she's not doing her 9 to 5, but I know you are a very busy girl. What are your thoughts on that? Like, do you think you'll always do something for the rest of your life?
I think so. I mean, my big goal was to retire from that 40 hours, 50 hours a week working for somebody else and making somebody else wealthy, even though I had an amazing job. But I don't think, retirement for me is going to be sit down and watch TV and lay on the beach for, days on with no stop at the end. Because I think part of it is I got here today because I have motivation and I have goals. And so just the goals now change and the motivation, is still a fire burning in me where I'm still going to do stuff. I mean, I just bought a piece of land to build stacked towns. There's definitely new opportunities that come about. And I don't think for, many of us that are in this real estate game, when we say retire, it just means we don't have to work for the 9 to 5 job world anymore. And we've got the time to schedule what we want to do and, say yes to the opportunities that we want to do and say no to the other ones.
And so, Sarah, there's a lot of people that get into this game and they want to be Sarah Larbis. They want to retire from their 9 to 5, but then they just end up having 2 jobs. They have their job 40, 50, 60 hours a week, and then they've got properties to take care of, and it's not really what they signed up for. What's the secret there? I'm thinking you kind of have to have the end in mind when you start. How did it work for you? And from the very first property to when you did retire, late 2020, how long did that take?
From the first investment property, that was 7 years ago. So it took 7 years. And I will say, a lot of the time goes into learning and educating yourself and reading and making offers and acquiring properties. Once they're done, essentially renovated, tenanted, the time spent on those particular properties is not as drastic as people might think. So yes, absolutely. There were some weeks that I was working a ton and also had the real estate piece. But when I look at it, it wasn't so much the management as it was just educating myself as much as possible, especially in the beginning. And ultimately, you build your team, right? Build a team of, people that can help you get to that next level and that can do a lot of stuff. I'm luckily not handy. I will not do the contracting stuff myself in terms of the labor. So I find great people to do that. Good mortgage broker, a good accountant, et cetera. And once you've got your team in place, you can delegate and work on the business rather than in the business. And that was a piece that helped a lot. But yeah, absolutely. There's some sacrifices to be made to get to a goal like this.
No, that's fantastic. There was an elderly person that said, Rav, I'm not retiring, I'm refiring. They're on to other things. And, when you talk about a beach, my mind always goes to Tom Hanks in Castaway. Remember, it was so depressing. Meanwhile, he had a beautiful beach, he had the water, he had his friend named Wilson. Yes, life is not about sitting on a beach all day. Real fulfillment comes, in friendship, in relationship. And if you can have more time to do that. And then also, I don't knock people that work. Some people say, Rav, I love my job. And I say, that's amazing. I think it's a blessing to love your job. And a lot of people don't, 9 to 5. And so then they want to, find other ways to be able to feed them and their families by way of investment. What is that thing behind you there? So I know what it is, but for the viewers, yes. So talk to us a little bit about the Right Club.
Yeah, so this is a passion of mine, is to help other investors learn and get educated and take action on real estate investing. So the Right Club stands for Real Estate Investing Training and Education. Essentially, we are virtual, Canada-wide, coast to coast, and we provide online education, webinars, podcasts. There's a forum, and it's something we've been working on. There's 4 founders for the last 4 years to build a strong community where people can find out who to have on their team, to be able to understand how to do the right analysis for deals, to be able to get, the right information for Canadians. So we really wanted to create a, platform for Canadians that are interested in investing in real estate without having to spend thousands and thousands and thousands of dollars. A lot of this stuff is completely free. And, I'll tell you, the networking piece, because it's important to network and to get to, learn and learn from others that are, ahead of you and give back too. So it's a great platform to network as well.
No, I love it. I mean, I've seen, I get them. I'm subscribed to your newsletter, and I see all the different podcasts and interviews. Great topics. So thank you for doing that. I think that knowledge mitigates risk. Knowledge breeds confidence, and so I'm very, Canada, people that are watching, or even in North America, grateful to people like you that are just nurturing and doing it actively. So you love, what I love about what you do is the BUR strategy, generally speaking. The BUR, I call it so the BUR is the buy, rehab or renovate, rent out, refinance, repeat. I call it the R5, same thing. You require a property, but I love that, Sarah, because what you're doing is you're buying a property and then you're increasing its value, pulling the money out, and then you can move on to the next one. And the topic of today's show is using that BUR strategy, investing in cottages. I mean, you can use that BUR strategy, whether it's an apartment building, whether it's a single family home, whether it's a cottage, short-term rentals, right? I mean, anything you could, probably not so much a condo, but depends, how much work you could do in a condominium. But what's interesting is you don't lift a hammer or a nail and so tell us why you love this strategy as opposed to turnkey. Explain what turnkey is, by the way.
Yeah, turnkey is essentially you're buying a retail property, something that a homeowner might live in, something that you basically just give the keys to the tenants and you don't have a whole lot of work. And originally that's actually how I started. And it's also known as buy and hold. And essentially the problem with that is you're leaving your money in there. So you're putting the 20% down plus the closing costs, and it might take you a while to refinance that money to be able to reuse it for the next one. Unless you've got deep pockets, then you can keep going. But at some point you're going to get capped quickly and run out of money. And so the renovation piece, adding that in, essentially it's what I'm doing with a BUR strategy. It's the best of, in my opinion, flipping and buying and holding together. And you're able to recycle your money faster so that you can actually reuse it for the next house. So if I take a property that's undervalued because it looks rough, put in the renovation, AKA hire somebody to do it, of course, and you want to run the numbers, you're going to get somebody to go in and appraise it, and they're going to appraise it at a higher amount. And if you've done your analysis correctly and you've ran the numbers, you'll likely be able to pull most, if not all of your cash and your capital at that point to be able to recycle it. And you also will have higher rents, likely better tenant profiles because you've got a cleaner, nicer place. So, again, not every single strategy has only pros. There's definitely cons with everyone as well, including this one. But to me, it is by far my favorite.
And what's the time period when you first, get that property to the point that it's ready to rent out? What's kind of your sweet spot?
Yeah, I mean, it ranges anywhere between 3 to 6 to 7 months, depending on how extensive the renovations are and how many, city permits that we need and how quickly those cities are, depending on where we are. But I would say average rule of thumb, about 3 to 6 months to do renos or conversions.
Okay, perfect. Well, let's take a quick break and then we'll dissect the numbers. We'll go through one of your BUR strategies with a cottage property. Thanks, Sarah, for being on the show. Thank you guys for watching. Don't go anywhere. We'll be right back. Hey, it's Rav from Everyday Investor TV show. Super excited. After 17 years of being on TV teaching investing, we finally are having our very first workshop. It's the Everyday Investor Workshop, March 6th. It's a Saturday, 10 a.m. to 4 p.m. My good buddy Ray Ostrander will be doing some teaching along with me. You don't want to miss it. Make sure you register at everydayinvestor.com. Hey, it's Rav. Welcome back to Everyday Investor. We're talking to my good friend Sarah Larbi, how we can make money investing in cottages. Before we do that, let's see what's happening in the world of mortgages with our mortgage expert, Kyle Ford. Over to you, Kyle.
Thanks, Rav. Today I want to talk about going in firm. In today's aggressive real estate market, it's becoming more and more common to see not only investors, but homeowners having to make an aggressive bid on a property without any finance condition. As a mortgage broker, I never encourage to go in without a financing condition. But as an investor, I do understand how difficult it could be to secure a file by having that condition in there. Now more than ever, it's so important to have multiple backup plans. Can you add a cosigner? Can you get additional down payment to increase to cover any shortfall in an appraisal? Are you willing to accept a lower tier of lender, a B lender with a higher interest rate, or a private lender who will maybe cover a different loan to value? Do you have multiple exit strategies? If you're buying this as your forever home, you probably don't. But if you're an investor, could you buy and hold? Could you flip where you could use private money to close? In today's real estate market, more than ever, we need to stick to our numbers, keep our cool, and lean on our power teams. Make sure you're speaking with your mortgage broker, realtor, and lawyer about the consequences and results of going in firm without that financing condition. Always here to help. Thanks, and back to you, Rav.
Thank you, Kyle. Always great to hear your perspective. Sarah Larbi from Right Club, thank you for being on the show with me today.
It's been a great time so far.
Yes, well, it's just going to get better because we're going to look at the return on investment on just one of your properties. And this happens to be a cottage. So you are where right now? You're located in what area?
The cottage itself is in Lakefield in the Kawarthas. Me personally, I'm in Oakville. And, so it's about a couple hours to the cottage.
Okay, so talk to me about that. So how does that work? Are we go on the MLS and just randomly pick a property? I know we don't do that. So, or Sarah doesn't do that. So how did this acquisition come to fruition?
Yeah, absolutely. So I was looking for a cottage. I'm still looking for more of them because I do really enjoy them and I do like them. There are some criteria that I had as I was looking through. Definitely for me, it was important to get a 4-season cottage because the financing is easier and they can finance it like a secondary home or a typical rental with a 20% down. So that worked really well. And then because I like the BUR strategy, I like the cottages that are old and dated but have good bones where there is a lift to be had. And sometimes you got to be really quick. So I found a good local realtor. Again, I have different realtors for different regions that knew the area really well. And we essentially bought this place within a few hours of it hitting the MLS. But other than that, like a couple other important things to getting a cottage is you want to make sure that there's a rental market, that you are able to rent out your place short term if that is the goal, because there are going to be some municipalities that may frown upon it. In addition, I know this sounds crazy, but having good Wi-Fi, like if you get good solid Wi-Fi, unlimited Wi-Fi, that's super important. That's just almost as important as good waterfront and just having that cell service. So there's a few things that were, non-negotiables. Owning the waterfront was also non-negotiable for me. Privacy, just to give you guys some additional things. And then also having the ability, when we bought this, there was three bedrooms, 2 and one was not really a bedroom, and we created 4 bedrooms, and that just allows us to get higher rent and just to get more people that might be able to share those costs. There's 2 bathrooms, that's always a plus. Privacy is always a plus. Waterfront, it's a little weedy, but it's definitely manageable. We get somebody to clear those out every single year for us. But there's lots of things when you're looking for a cottage. Again, those were just my main criteria. Of course, having a septic versus a holding tank is better. But there's things that you can change, and there's some things that you cannot change. And so those are some of the criteria I have there.
So the biggest thing that I heard you say was that Sarah's you said so much and it's great, but one of the biggest things that I think encompasses it all is Sarah's in Oakville, the property's in the Kawarthas, hopefully I spelled that right, not sure. And so you need a great realtor, and that realtor is local to the Kawarthas, that when something came up was able to say, Sarah, this is a great deal. The reason why they know this is a great deal is because you told them what you're looking for, and then bang, you transacted in 3-4 hours.
Exactly. Absolutely. A lot of the time now, and I'm not saying to do this when you're brand new, but I've bought sight unseen, conditional on inspection as an example. So the first time that we actually saw this place, she video FaceTimed me and we bought it. And then we actually saw it with the inspector for the first time. And I'll tell you, if we would have waited, there was an open house and we would have gotten into bidding wars. So just, definitely take the risk that you're comfortable taking, no more. But for us, we were able to get a great deal, and we avoided a lot of the bidding war because we were quick.
Yeah, I mean, well, again, you talked about, and we can't stress it enough, is having the right team, having the right accountant, having the right lawyer, having the right mortgage specialist, having the right realtor. And for me personally, I always want to give people a chance. But if I have my pick, I like those categories, that people that are investors. I like my accountant that's investing. I like my realtor who's an investor, and so on and so forth. Doesn't mean that, I wouldn't go with someone in an area if they didn't have investment properties. But, we need them to be competent, and we have to be able to trust them. Both are very, very important. If you don't know them, then obviously there's some chemistry that's there, and hopefully that works out. Okay, great. So we're in the Kawarthas. This was very interesting. You want to make sure that it's 4 seasons. It's easier to get financing, and you make more money, obviously, because you can rent it all year round. Up there in the winter is beautiful, and of course in the summer is beautiful, spring and fall as well. So what was our purchase price on this?
So this one was $485,000.
Okay, $485,000. Take me through the numbers. Help me get to the ROI.
All right. So the down payment, 20%, because it was a 4 season, which was $97,000. And then there's closing costs. So there's some legal costs. There's a land transfer. That's $8,000.
Okay, $8K.
And then we did some renos, which the renos were $70,000.
$70,000. Okay, so we bought it for $485,000. We put 20% down, almost $100,000. Closing costs in this wonderful country of ours. We need to pay out, whether it's land transfer tax, whether it's our lawyer. It's good to do that. So we have $8,000 there. And then you took $70,000 to renovate this property. Any other outlay of cash?
That was it.
That was it. Okay, so this adds up to what?
So so the after repair value was $760, but I can add up what it adds up to. So $175 all in.
So $175K all in, and the new value was what?
So the new value at the time that we did this was $760.
Wow, that's a nice lift. So you bought for $485,000, you put 70 grand into it, which takes me to about $550 or so. And so we're over $200,000 on a lift.
Yeah, and I'll tell you this year, so this was last year, but this year the same cottages in those areas, because, with the shutdown, everybody's moving into it, our new value has actually gone up dramatically to $860, which we're not going to count for the numbers, but it was definitely a good buy in the last couple of years that we've bought it. It's just done tremendous.
That's amazing. I mean, we don't even have to go into the percentages. We will, because I like to see the percentages, but what I hear you saying is your great realtor, because you need a great one, gave you a call and said, here's a property. You transacted within hours. It cost $485,000. You did your stuff and you lifted it. You increased it. So if you were to flip this properly, you pay some expenses, you make $150,000 to $200,000. And how long did this take?
So that took about 6 months.
6 months. So this took 6 months. I'm looking at my production team here behind the camera, and that's not a bad wage for 6 months. Yes, Sarah, that is great to be able to do this. And was this your first, I know you have many properties and you've been doing this all over the place, but was this your first cottage?
This was the first cottage property. The other ones are regular homes with longer term and some shorter term tenants as well, but this was the first recreational cottage property on the water.
And then, of course, you can enjoy this yourself with you and your family because you get to dictate when you rent it out and to whom. And
yeah, we definitely do. We pick our vacation. So I'm planning on being there all of May and June this coming year, and we then release the rest of it. And I'll tell you, it's pretty much full as of right now, as we're recording this for this coming summer. And
that's why, because I know you're not going to just lie out on your deck for May and June. That's why you need really great Wi-Fi so you can work from home.
Exactly.
And be a virtual guest again on the Everyday Investor.
Absolutely. And I'll tell you, it is fun to invite people because nobody says no to fun cottage week or weekend. So it's nice to get to hang out with our friends for a little bit longer.
Well, hey, I'll be looking for that invite. No, that's great. Okay, so take me through how we make money on this. I mean, it's obvious, but what's the different ways that now that you've made money? Of course, it's going to go up in price just naturally. It goes up, right? And then, of course, your mortgage pay down. Mortgage is going down. I'm sure there's some cash flow there after all your expenses. And then, of course, the big one is how you forced it to go up. So kind of goes on. Am I right on this, or is there something to take away or to add?
Nope, that's good.
Okay, so what are these numbers?
Natural appreciation, I put, between 5 to 6%, give or take.
And that's what the area is commanding, or is that pretty conservative?
It's conservative. I mean, right now the area is commanding a lot more, which is not reasonable. So I think, being reasonable, don't look at what happened in the last 2 years. 5 to 6% annually once you're done your renos is likely a good, 10-year average.
So you're saying you're going to take 5% of the 760?
Yeah, 38.
Okay, so 38K. All right, and then we're paying down our mortgage.
Mortgage pay down $8,000.
$8,000 for the year?
Yep.
Okay. And that's important for people to know. I was talking to a friend, when you first buy a property, a lot goes to interest. Not necessarily a lot goes to the principal pay down, but over time, obviously that changes. And so that's great. So $8,000 mortgage pay down. And then after all your expenses, what is your cash flow? What are you receiving?
Cash flow, $34,376.
That's a big number. Let me just put 34 to make it easy. That is a big number, 34,000, right? That's about $3,000, a month, just shy of that. Let's talk about that in a second. And then you forced it up. What was your number there?
That was 205.
205. And I'm going to leave this right here for a second. So do me a favor, Sarah. Just add up these three numbers. Forget about your forced appreciation. Just give me the 38, 8, and 34.
Let me just see here.
Yeah, in total, but I'm just saying the 38, the 8, and the 34.
Is 80.
$80,000, okay? So then we take the $80,000 and we'll leave your renos in there just for fun. Take the $80,000 and divide it by 175.
Times 100?
Yeah.
Is 45.71.
45%. 45% ROI plus a couple $100,000. 45% annualized return on your money plus a couple $100,000. Sarah, I mean, this is great stuff. Time is flying. We've got about 30 seconds to a minute before we have to go. And we didn't even get into the refinancing, pulling this out, going and doing the next one. What is next for Sarah Larbi? Here we are, in the winter of 2020. You're still investing aggressively. What's next for you?
Yeah, so I just bought a piece of land. I'm going to be developing 12 units on with a partner up actually where the cottage is as well. So we're going to do some stacked towns, which I'm excited about. And, I'm continuing. I mean, I'm still buying deals. I'm still looking for cottages. I'm still looking for BUR opportunities to purchase. Just because I'm retired from the 9-to-5 job doesn't mean I don't want to do anything and have new goals. So I'm super excited about that development project. It'll take a couple years. The Right Club is still something I'm working on, as well as my 2 podcasts. That keeps it fun, and I get to interview awesome investors too. So I'm going to keep acquiring what makes sense.
Love it. Thank you, Sarah, so much for being on the show.
Thanks very much.
And thank you, viewers at home, for watching. Without you, we would not have a show. Make sure you tune in next week, same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.